What's up guys, Alvaro here. Welcome to the Bilingual Stock Market channel again. On this channel we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update, so I want to break down some technicals going over the S&P 500 and the Nasdaq 100, and at the end of the video, I am going to break down some meme stocks because the meme stocks are back in the game. No doubt about it. So I am going to break down from a technical standpoint AMC Entertainment, Gamestop, Robinhood Markets, and Blackberry. So without further ado, let's get right into the video. And what can I say, guys? I mean, today was an unbelievable green day. We had an unbelievable green day all across the board. The Russell 2000 was the best performing index out of the bunch, up 1.02%. Nasdaq went up 0.52%. Dow Jones pretty much broke even. It went up 0.09%, and the S&P 500 went up 0.15%, and the S&P is getting closer to the fat number of 4,500. We are going to go over the S&P 500 in just a second. When it comes to the sectors that trade inside the S&P, the best performing sector by far was energy. Once again, energy was also the best performing sector in yesterday's trading session, and the worst performing sector was consumer staples, which went down 0.76%, nothing to be really worried about. And before going over the S&P 500, and if you guys happen to remember, I played earnings with Best Buy. If you guys remember the video that we posted, was that yesterday? No, that was on Sunday. I told you, I have reasons to believe that Best Buy is going to report better than expected earnings because I am a customer of Best Buy. I give them some business, and the stores of this company are absolutely packed. And I happen to be right, so Best Buy reported way better than expected earnings. So yesterday, I picked up 50 shares of Best Buy at $113. And today, I know, guys, I left a lot of money on the table, but it is what it is. Profit is profit. I ended up selling my 50 shares pre-market at $117, so I paid $5,651, and I exited this trade being paid $5,851, so I made $200 over here. This was a base hit, and base hits put you in the Hall of Fame, as good old David Frost would say. So now let's go ahead and take a look at another trade that I closed in today's trading session, and that was also broken down from a technical standpoint in one of the videos that we posted last week. I am talking about Spotify. In the case of Spotify, let me pull up here the history of the trades that I have taken on Spotify recently. So on August 11th, I purchased 30 shares at $214.39, paying $6,431, and I sold out of these 30 shares in today's trading session at $224.88, and I was paid $6,746, so I made $300 out of this trade. And as I just said, these two trades were broken down from a technical standpoint, and these trades ended up playing out as I said here on the channel. And now let's go ahead and take a look at the S&P 500, and we have another new brand all-time high in the S&P 500 at 4,492 points, 4492. And guys, I mean, yeah, maybe we could see a drop from here. Who knows? Because the markets sometimes do the opposite relative to what we are expecting. But come on, guys, we are only, I mean, the S&P 500 closed today's trading session at 4,486 points. So we are 14 points away from 4,500, the fat number that is acting like a magnet. We are trading above the moving averages. We are on a clear uptrend, and the RSI of the S&P is at 62 points. So I said in one of the videos that we posted last week that I am expecting some sort of little pullback before October ends. When I say a little pullback, We can talk about a small correction of 5 or 7%, but I don't think that we are going to see any significant pullback in the S&P 500 until this index reaches 4,500 points. That's my opinion. If tomorrow we happen to see some sort of pullback in the S&P 500, the main area of lower support that I am going to be looking at is going to be 4460. 4462. We are talking about a former area of overhead resistance in which the bulls of the S&P already failed back on August 17, and they also failed back on August 12. I think that is the lowest the S&P could potentially go before reaching the fat number of 4,500. And other than that, there's nothing wrong with this tape. As I just said, we are on a clear uptrend. We are trading above the moving averages, and the RSI is a bit high, nothing to be worried about, 62 points. So, and I think that I actually entitled one of the videos that we posted last week, like something like 4,500 coming up for the S&P 500, and until proven wrong, I am going to be right, if that makes any sense. In the case of the Nasdaq 100, this index went up today 0.29%, and it closed today's trading session at 15,357 points, and we have a brand new all-time high in the case of the Nasdaq 100 at 15,384 points. The RSI on the 4-hour chart is at 68 points, so the Nasdaq 100 is getting a bit more overheated relative to the S&P 500. So if tomorrow we happen to see a pullback in this index, I am going to be looking at as support the same area that I told you guys about in yesterday's video. 15,150 points approximately. 15,150 points is a previous area of overhead resistance in which the bulls of the Nasdaq 100 of the NDX already failed on 1, 2, 3, 4, 5, 6, and 7 occasions in recent days. So watch out for that area of lower support, and in terms of overhead resistance, and taking into account that the Nasdaq 100 closed today's trading session at 15,357 points, then obviously overhead resistance is pretty much the new all-time high in the Nasdaq 100 at 15,384 points. But other than that, we are on a clear uptrend, trading above the moving averages. We closed today's trading session making a higher high on the 4-hour chart, so there's absolutely nothing wrong with this tape. And now let's go ahead and take a look at good old AMC Entertainment. And finally, guys, and at last, the bulls managed to take on the area of overhead resistance, an important area of overhead resistance at $38. And as of now, let me pull up here because I think that we are having some fun after hours. Let me see now. I mean, the bulls of AMC were rejected today at $48, which is a previous area of overhead resistance and support that was supposed to act as an important area of overhead resistance for AMC. And after hours, we are trading at $44.75. So let me pull up here the 4-hour chart, and I am going to zoom in. And guys, obviously, the RSI is very elevated. It is at 82 points on the 4-hour chart. We already know that when AMC or any other meme stock trades on good volume and momentum, we can see the RSI of these meme stocks staying very elevated for quite a long time. But mind you, the RSI is very elevated. So in tomorrow's trading session, one likely scenario would be AMC pulling back and paying a visit to the former area of overhead resistance that was broken to the upside in today's trading session at $38, which is a previous area of overhead resistance that also coincides with the 180 SMA on the 4-hour chart. That would be a buy zone in my opinion. $38 is a previous area of overhead resistance in which the bulls of AMC already failed on 1, 2, 3, 4, and 5 occasions before. We are also talking about a former area of lower support that acted as such back in late July and also back in early August, and we are also talking about a former area of lower support that acted as such in early June. So $38 would be a buy in my opinion. Can AMC burst above $48 and fill the gap up to the next important area of overhead resistance at $52? That could happen, guys, but the RSI, as I just said, is very elevated. It is at 82 points. So $47, $46.50 is a previous area of overhead resistance in which the bulls of AMC felt back on July 21st, and they also felt back on July 20th. And we are also talking about a former area of lower support that already acted as such for AMC also back in the beginning of June. So we can expect this area near $47 and $46 to provide a very important overhead resistance for AMC. And let's see what happens, guys. This is going to be very interesting tomorrow. As I just said, I think that $38, if visited, and if AMC happens to find support at that area, is a buy zone, no doubt about it. And if any of you wants to take a momentum trade with AMC bursting above $46, even though the RSI is very elevated, then that's not a trade that I am going to be involved with. But if any of you wants to do it, then good luck with that, because if that happens, and as I just said, if AMC can burst above $46.50 or $47 on good volume and momentum, then the next gap that has to be filled is going to be this gap up to $52, which is a previous area of support that acted as such for AMC in June and also in early July. So this is going to be very interesting tomorrow, and no doubt about it, AMC and the meme stocks are back. And in the case of GameStop, so what happened with GameStop? This stock went absolutely bananas today, guys. GameStop went up 27%. Jeez. And it closed today's trading session at $210.29. And let me show you. I took advantage of this rally of GameStop in order to get rid of a bag that I was holding since I don't remember when. Let me see. So I had two positions on GameStop. This is my main trading and investment portfolio. And I purchased 20 shares of GameStop on July 2nd, guys. So I was holding this bag for almost 2 months. So on July 2nd, I purchased 20 shares of GameStop at $202.85. And I sold out of those shares today. I left a lot of money on the table because I have another position that I am going to show you in just a second. So I sold out of these 20 shares at $209.49. So I paid $4,056 and I was paid today $4,189. So I pretty much made over here $130. However, with my second trading and investment portfolio, I also locked in some profit in the case of GameStop. And here we have my second investment and trading portfolio. And take a look, guys. So this is pretty much the same situation the same trade that I just showed you guys with my main trading and investment portfolio. So on June 29, I purchased 25 shares of GameStop at $212.96, paying $5,324, and I sold out of these 25 shares today at $222.74. So I paid $5,324, and I was paid today, earlier today, $5,568. So I ended up leaving this trade or closing this trade with a profit of $240. So I pretty much ended up making on GameStop alone today something like $350, and I fortunately was able to get rid of this bag. However, of these two bags, because we are talking about two bags. Tomorrow I am going to be paying a close attention to GameStop, so let me zoom in here on the 4-hour chart and take a look, guys. This is a warning for all of you So the RSI on the 4-hour chart is at 90 points already. Very, but very elevated. However, let's see what happens tomorrow, because GameStop closed today's trading session at $210. $200 is a very important previous area of support and resistance, guys, mind you. $210 already acted as lower support for GameStop back on June 22nd, but we are also talking about a former area of overhead resistance in which the bulls of GameStop failed back in late April. They also failed back in early April, and they also failed back in early February. So what happens if tomorrow GameStop pays a visit down to this former area of support and resistance near $200, and we notice that GameStop starts to consolidate slightly above $200? That is going to be a buy zone, no doubt about it. So if I happen to pick up some shares of GameStop at $200, $201 each, then my price target is going to be the next very important area of overhead resistance for GameStop near $229. $229 is a previous area of overhead resistance in which the bulls of GameStop already failed back on June 23rd, and they also failed back on June 17. So if I were able to take this trade the way that I am describing it, as I just said, picking up some shares at $200 or $201 and selling out of those shares at $229 each, I could be potentially locking in a profit of almost 12%. So watch out for GameStop tomorrow paying a visit down to the former area of lower support and resistance near $200, finding a good support over there and then bouncing back up. And now let's go ahead and take a look at another meme stock, Robinhood Markets. And in the case of Robinhood Markets, guys, this was a stock that I broke down here on the channel from a technical standpoint in the video that we posted on last Thursday. And I told you, let me show you over here. Let me pull up my main trading and investment portfolio. So I told you, watch out for Robinhood paying a visit down to the lower support of $43, because $43 is an area that has acted as support, I think, twice. I am going to double check on that. So on August 20th, I purchased 50 shares of Robinhood at $43.50, paying $2,157. And today I sold out of those shares. And once again, I left a lot of money on the table, but that's fine because profit is profit. So I sold out of these 50 shares at $47.08. So I was paid $2,353. So I ended up making over here something like $200. And again, this was a base hit, but a bunch of base hits put you in the Hall of Fame. So what's my plan when it comes to Robinhood, guys? I am not going to pick up any shares of Robinhood above $43. I am going to be patient, and if Robinhood in tomorrow's trading session happens to pay another visit down to the area in which I picked up the 50 shares that I just showed you near $43, $43.30, then that is going to be a price in which I am going to be more than willing to start a new position on Robinhood. $43 acted as lower support for Robinhood on last Friday, which was the day in which I started the position that I just showed you. But we are also talking about a former area of lower support that acted as such back on August 3rd. So if I start a new position at $43, then my price target is, I am going to be more patient now, because today I locked in the profit at $47. I could have waited a bit more because Robinhood went up to $50. So next time I am going to be more patient, and my price target is going to be at $52, which is a previous area of overhead resistance in which the bulls of Robinhood already failed back on August 18. They also failed back on August 11th, and we are also talking about a former area of lower support that already acted as such back on August 6th and also back on August 4th. So if I were able to take this trade the way that that I am describing it, I could be locking in a profit of almost 16%. So watch out for Robinhood, guys, because $43 is a very important area of lower support. And now let's go ahead and finish this video with good old Blackberry, which went on an absolute tear today, guys. Blackberry went up 9.47% and it closed today's trading session at $11.10. And again, take a look at the RSI of Blackberry on the 4-hour chart. It is at 80 points. And take a look at this interesting technical detail, guys. When I went over AMC and Gamestop and Robinhood, you guys, we have already seen those meme stocks trading with the RSI on the 4-hour chart, or with their RSI on the 4-hour chart at very high levels, guys, in plenty, on many occasions before. But in the case of Blackberry, this is not the case. So this is not a stock that is accustomed to trade with its RSI being so elevated. So the fact that the RSI of the stock of this company is at 80 points is obviously a warning sign. And I am not going to touch Blackberry unless the stock of this meme stock happens to drop a bit and pays a visit to the area of lower support at $10.55. $10.55 is a previous area of overhead resistance in which the bulls of Blackberry already felt back on August 12th. They also felt back on July 29th. And we are also talking about a former area of lower support that already acted as such for the stock of this company back on March 11th and also back on February 3rd. So, and on top of that, we can also see here on the 4-hour chart the 180 SMA coinciding on the 4-hour chart with this previous area of lower support and resistance. So if I happen to see Blackberry paying a visit down to this area at $10.50-ish, and if by doing so, I also notice the RSI on the 4-hour chart taking a rest, and if I also notice, guys, that Blackberry happens to find a good support at $10.40 or $10.50, then I am going to be tempted to pick up 100 or 200 shares of Blackberry, in which case my price target is going to be the next important area of overhead resistance for this stock at $13. $13 is a previous area of overhead resistance in which the bulls of Blackberry already felt back on February 25th, and they also felt back on February 12th. So if I were able to take this trade the way that I am describing it, purchasing shares at $10.50 and selling out of those shares at $13 each, I could be making a profit of almost 20%, a very solid profit. So watch out for Blackberry paying a visit down to the $10.40 or $10.50, and watch out for the RSI because it is extremely elevated. And with Blackberry, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel, in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Keep on crushing the markets, guys. Peace out.